Hello financial investors and welcome to the channel. My name is Brent and today we are going to be doing our Stock Monday buys here on the 4th of May 2020. May the 4th be with you. Not only is it a great day because it is Monday, it is also the 4th of May, which is my boy's birthday. So we're actually going to be going out celebrating his birthday, doing a Minecraft birthday party style, all for ourselves in the quarantine state. but what we're going to be doing in today's video is going over our portfolio today, looking at which stocks are offering a good opportunity here on this Monday buy, as what is currently being shown as going to be a negative day, as there's some tensions between the US and China, with the US blaming China for the current pandemic. So that's what's out there with the current tensions between the US and China. And China's actually down over 4% right now. Oh, they closed now down over 4.18%. Germany is still open, down 3.18%. So it looks like it may be a bit of a rough day today going into the markets. But we're going to go ahead and jump into the video. If you are brand new to my channel, have not yet subscribed, would really appreciate if you do head down below, subscribe to the channel if you are interested in stock market, dividends, personal finance videos. If you have any questions or suggestions, leave them down in the comment section below. And of course, if you do enjoy this video, find it helpful, entertaining, give this video a thumbs up. And let's go ahead and get into the video. Okay, so as we know, we've already covered some of the current, media that's out there. How is the market looking to be on Monday? Well, it's going to it may be negative here in the morning, may kick it up towards the afternoon and have a bit of a sell-off, but we really don't know with this current market. Now, jumping over into the M1 Finance portfolio, what I like to do here on a week-by-week basis is take a look at the overall portfolio changes for the past week, look at the dividends and activity that we had last week, and also individual positions. How did these individual positions within our portfolio actually move? Did some new positions offer an opportunity to present itself in order to have an investment towards it? That's what we like to look at here in these videos. So right off the bat, let's go ahead and jump over into the activity. Now, last week we had the 27th through the 1st of May 2020. So here we just take a look here on the 27th. We had one buy get performed. Last week we purchased Eaton Vance, an asset management company. Now on Wednesday, I released a video covering how to sell a holding without it being completely having the equity being reinvested into your portfolio. I had sold Clorox in that video as an example. Well, I forgot to cancel that sell, and Clorox was sold at $183.62. So if I were to kind of pull up Clorox currently, it is trading at $192.71. So I definitely messed that up, sold out of a position I was not really planning to sell out of, and that was my fault. Now, I did get some dividends last week. We have $15.11 from Altria. JP Morgan paid out $3.92. And AT&T paid out $11.87. So right there, we have some pretty nice sized numbers there. $15.11 plus $3.92 plus $11.87. That's a total in a week of $30.90. So that in itself is a very good payout. Plus, we sold the $96 there of equity from Clorox, and we made our weekly deposit there of $115.38 for roughly 200. We also sold a little bit extra there of 10 cents. We're just going to go ahead and add 10 cents. So we should have roughly $242.56 there in our cash balance in order to invest this week. And that's exactly what we have. So taking a look now at the 1 week performance, we were positive this past week by 0.43%. But actually, this is just because we earned some dividends in this past week. We had earned dividends of $41.13, which just means that we earned them. We sat through the ex-dividend. It was more than likely Eaton Vance and a few other positions, and those earned dividends actually offset our gains, well, I guess we would have actually been positive in the week because we did have market gains there of $49.50, but our overall return probably would have been around 0.25% possibly last week versus it being up 0.43%. That's because of the earned dividends. But overall, that's pretty positive. Last week was a bit of a negative week in the total market. Now, looking at the positions here, as far as which are our biggest gainers and losers, our REITs were up at the top. You can see here the three holdings at the top for the week are Real Estate Investment Trust. We have Tanger Factory Outlet, we have Simon Property Group, and we have WP Carey. Then we go into some of the other companies here: Lowe's, ABM, Realty Income, Las Vegas Sands, and so on. And of course, our worst performers last week, which was really interesting to see utilities get hit as hard as it was Consolidated Edison, down 6.52% last week. This actually put this position into the negative just by a little bit, but it's enough to come to my attention now. And looking at it, it was on my chalk block as far as positions I'd like to average into. And also, it is going ex-dividend here in May, just a few days away. So it is one of the ones I'm planning to buy here today. We also have Cardinal Health, down 5.76. Southern Company, another utility company there, down 5.75, and so on. We can see Walmart, Walgreens. It's kind of these, these are some of the stronger companies that have been, recently pretty strong. And now with the market reopening, investors are kind of moving their capital maybe from some of the safer positions that have been around in the last few weeks, maybe into some of the riskier positions. We can see JP Morgan, Chevron, Waco, Kellogg's, 3M, and so on. So it's kind of just interesting to always take a look at your portfolio and see how the holdings, what sectors are doing really well within your portfolio. So there we are. We covered the activity for the week, the dividends that paid out, and now let's go ahead and cover what specific positions we are planning to buy here on Monday. Now, there are three positions that I'm looking at right now. I believe two of them have gone earnings here, so we'll take a look at the earnings here, the recent earnings. I believe I'm still waiting on Consolidated Edison. It went earnings back in February, so I think we're going to get it here in May. But we'll take a look at that here in just a second. Now, the three positions I was looking to buy into is 95. So I'm going to move that. So I only bought Eaton Vance last week, so I only have to put roughly another $95 into Eaton Vance, but that'll be for another day. Okay, so the three positions that I want to buy into, again, remember Consolidated Edison here. It is now down roughly 1.25%, putting it into the negative for the week. And that was just offered this week, down 6.52 on the week. So this is an opportunity here that we didn't really have in the past. There's no really big reason for this company to have taken that big of a hit. They're really strong, 45 years of continued dividend growing history. Payout load ratio of 70% or less, and this is a diversified utility, so it's not going around, it's not going out of business, and individuals are still going to be paying their bills and such, offering a very nice yield of roughly 4%, and this one is going ex-dividend on May 12th, 2020, so just 7 days away. That means that on the 12th, which is next Tuesday, I have the opportunity, not only this week on Monday, but also next week on the 11th, in order to buy this company prior to it going ex-dividend. Now, the other two positions that I wanted to also buy here that are in May is Walgreens. We can see here that I have my May months right in this area here. I don't want to drag it. So I just want to click it, and I also want to kind of click a few. Okay, so these are my companies right here that are going ex-dividend in May. Now, of these positions, we have Consolidated Edison, we have Walgreens, Chevron there, Walgreens, 3M, and Simon Property Group. Now, we can see here that 3M and Simon Property Group are over $900 of currently invested capital, whereas we have Walgreens at $673 and Chevron at $754. Now, I'm going to be holding off on Chevron, I believe, just a little bit more. I know I've been kind of putting cash into that one here in the few months, but they did recently, I believe they cut their dividend. I posted it over on my channel. They are going ex-dividend here on the 18th. but I have been investing quite a bit into Chevron. I'm probably just going to pull back the pedal just a little bit. I may do a little bit more research and buy a bit more, but at this time, I feel I would really like to kind of get into the opportunity of Consolidated Edison and also continue to buy some more Walgreens. Walgreens here, if we took a look at the M1 portfolio, it is also down 4.76% this last week. And it is also going ex-dividend here in May. If we go ahead and take a look at this one is going ex-dividend on my birthday, so it obviously makes sense that I need to be buying some more Walgreens here. And this one's going ex-dividend on the 14th of, in 14 days. So the 19th is on a Tuesday. So again, I have not only the 4th, the 11th, but I also have the 18th of May in order to buy just a bit more Walgreens, probably up to my $900 threshold for my cost basis that I would like to have it at. So that means roughly another $225 of equity getting invested into Walgreens. Okay, and then we did have 3M, but I'm not too interested in 3M at this moment. 3M doesn't go ex-dividend till the very end of the month. So if we take a look down here towards this sort of bottom here on dividend.com, they go ex-dividend roughly towards the end of the month, around the 23rd. So I do have some, I believe, about 3 weeks in order to decide if I want to add just a little bit more. And in the current time, I'll just kind of focus my equity being invested into Walgreens, Chevron, or Walgreens, Chevron, and Consolidated Edison. Now, taking a look over at their earnings, this one was posted back for Consolidated Edison. This one was back in the past quarter for December 2019, and this is kind of just showing how they did good earnings growth, but their revenue kind of suffered just a little bit, down 2.26 expected, but overall revenue growth year over year was up positive year over year. So we can see earnings expected was 0.79, and they came in at 0.86. And of course their revenue, which is slightly off, but that's not anything to kind of fret at. And they kind of go over where the company expects their earnings to kind of come in at for the year. So we're looking at 449. So if we look at here, this is showing 439. So there's actually a little bit lower payout ratio versus what this is kind of displaying. I don't see Consolidated Edison having any issues with their earnings going forward. I think they're usually pretty square as far as aiming where they want to go and having it hit. Now Walgreens, they recently put out some earnings just recently here. February 2020 earnings, I believe they just went and did their earnings last week. So if we take a look here, this was reported on April 2nd, 2020. Actually, I thought it was a little bit sooner. I don't think this is maybe the correct date, but either way, they recently came out with their earnings and their revenue, and they beat on both. And now that I, of course, went backward, that's not wanting to go forward anymore on me. So I'm going to go ahead and jump over to 3M. I was considering 3M, but I'm kind of holding off on 3M just a little bit longer. Like I said, I have a couple more weeks until I can decide to buy just a little bit more of 3M. But we can see here that the company withdrew guidance for 2020 earnings from 930 to 975, and the current consensus is 812. So they're basically aiming almost $1.15, almost $2 actually below their price, initial price. They lowered their guidance, and I don't like to see that, but it's expected during this current time frame. So we'll see how they kind of pan out here for 2020. It's not that I lost all hopes in the company in itself. It's just that if I can put my money to work elsewhere where it's going to be making me a higher yield for less risk in the current time frame, then I should do that. And then Walgreens here, second quarter they came in at 152 per share with revenue of 35.8 billion. So they beat expected of 145 and expected revenue of 35.3. So they beat by $0.5 billion there, and then they came in over 7 cents there for their earnings. So beat there by 1.3 and 1.5%. So Walgreens always doing it good. Interesting, great company there. So those are the two companies that I'm planning to buy here today: Consolidated Edison and Walgreens, and that's just the capital that's going to be split between these two. So I'm going to go ahead and jump over to my calculator. Oh, I already had it up there. 242.56 split two ways is 121.28. So all I'm going to do here is head down towards my bottom, because this is where my recent positions offered some opportunity. And we're going to go ahead and buy $121.28 and continue and confirm. Now, if you're kind of wondering in the past if I want to get back in the Clorox, yes, I would like to get back in the Clorox, but at this current time frame, because I did sell it in the 180s and it's now in the 190s, I'm going to go ahead and just kind of wait on that one. I did think in the past that I was a little bit high for the time being, and if it does come back into the 180s, 170s or so, that would be the best opportunity just to kind of buy back into it for the long term. But right now, I'm not in any rush to kind of jump back into that position. So there are our two buys for the week. We have Consolidated Edison and Walgreens for $121.28. So I did, doing a little more research over here on the side, but all revenue going positive, revenue, net income, free cash flow in these positions. So that is basically all I wanted to cover in today's video. And stock futures, again, still looking negative. I think the German market should be closing here shortly, and that one's showing is down 3.2%. So it'll be an interesting Monday for sure, but we're continuing our plan to dollar cost average our $6,000 into the trading year for 2020. And let me know in the comment section below, are you still sticking to your plan for 2020? Are you still dollar cost averaging? Did you already invest all your capital for the year, or have you been holding off, waiting to invest this whole time, even though we had recently a 30% dip from total highs to lows in the market? So I'd really be interested to kind of hear from you guys, and that is it. If you guys are interested in following more of this channel's content, we go over the stock market dividends, subscribe to the channel. If you did enjoy this video, find it helpful and entertaining, give this video a thumbs up. And of course, I would really like to hear from you in the comment section below. What are you currently looking at in the market? Are you waiting? Are you buying? Are you, brand new to the market? I'd really like to know. And that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.